Welcome to my channel. I'm the cover call guy, and my goal is to hit $120,000 per year in passive income using only cover call ETFs. Right now, I make about $70,000 a year and about $6,000 a month on my current portfolio. Legal disclaimer before we start this video. This content is for informational and educational purposes only and is not financial advice. I am not a licensed financial advisor or tax professional. All opinions are my own and may be incorrect. Trading and investing involve risks, including loss of principal. Please always do your own research and consult a licensed professional before making any financial decisions. I am just some random idiot you found online, and I could be completely wrong. With that out the way, today's video is gonna be on trying to make as much money following this AI boom, right? The AI revolution it's only gonna get bigger. It's only going to pretty much you need the infrastructure here. So what follows the infrastructure: electricity, gas, maybe nuclear, anything and everything. I kind of made a list of all of the cover call utilities that could possibly try to capitalize on this AI boom. So let's get started. All right, the AI power nexus is projected AI market value by 2030 is going to be around 10 trillion. That's what they're thinking. A multi-trillion-dollar catalyst, right? The boom in artificial intelligence is not a digital shift. It's a physical one, right? As AI models grow in complexity, the demand in processing power and consequently electricity is set to explode, right? There's already not enough power right now. The grid is failing and we need more electrical grid. We need more power. You guys can read this up on the news. It's like it's an everyday issue, right? People are already complaining that the electric bill is going through the roof because all these data centers. It's not enough. The grid is not modern and not fixed, and there's not enough of it to go around. So we should be capitalizing. We should be looking about, oh God, which there's always some type of cover call ETF for something, right? So this creates a massive multi-decade growth opportunity for the underlying infrastructure, data center, power plants, and utilities. We're going to be focusing on the utility part today because there's a lot of talks about data center, but not enough talks about utilities. So I want to do a video on something that's not talked about and kind of under the radar right now. Right, the problem, soaring electricity demand. As you can see, 2024, it's expected to already jump up 2030 to nearly double, right? AI electricity demand is projected to more than double by 2030, requiring a foundational build out of new power infrastructure. We got to get on this early. We got to get on this ASAP. Right, my strategy, right, and maybe your strategy: income versus speculation, right? The pure growth trap, such as XLU. Some investors chase pure growth, taking on full market risk and sacrificing all income. I don't want that. This path misses the opportunity to monetize the sector's guaranteed volatility. So what I'm going to use is XLUI. You can use XLUI to generate consistent income. This strategy lets you get paid from the sector's volatility, which is the whole point of using cover call ETFs for this long-term trend, right? I don't think it's going away. I don't. They can be a little bit more power efficient, but you're still going to need electricity. It's not just AI, right? The growth of the population expands. You need more power. So there's that. There's that play too. All right, and just breaking down for those who are new, welcome to my channel. This is how a cover call ETF works. All right, step one: buy a stock. The fund buys a basket of stocks, such as all of the companies in XLU. Then it sells the call, right? The fund sells call options on these stocks, obligating to sell if the price rises, and then it collects the income, which is the premium, right? It's the cash, and it pays it out to you, which is which leads to 4, which is the trade-off. In exchange for all the income, all upside potential of the options price is forfeited. That is always a trade-off for cover call ETFs. All right, the 20 plus ETF reality check. So about 6% is energy utility cover calls, and the rest is all others, right? The market for energy utility cover calls is a tiny fraction of the broader landscape. This is highly niche and underserved market, which I think is very under the radar. Everyone, not talking outside of AI, everyone needs electricity, power of some sort, right? So I think it's very, very underrated. It's not talked about enough, and that is a good buying opportunity I hope I selected the right ones. I hope I found the right ones. I hope I've put a list of some great ones. If you guys have come across some utility plays that could possibly kind of capture some of the AI boom, let me know. I've just put this list together. I think this is probably going to be the ETFs that could capture, um, most of the AI plays. So uh, this is it. This is my list. We're going to be rating it. We're going to be talking about it and see if you guys agree. Let me know. The first one is XLUI, which is utilities. The pro of this is that this is the most direct play. You get paid income from the exact utility companies that provide that powers data center. The con is 100% upside cap. You will miss out on explosive growth if the sector moons. This is purely an income play, so you got to do that trade-off. Again, there could be some NAV growth, but most of it will be income. This whole point is to get paid and live off of it. And then we have MLPD, Midstream. This is oil and gas, a smart pick and shovel play, right? You get income from the essential gas pipeline feeding the power plants. Cons, indirect exposure, less effective if the AI power boom shifts from primarily to nuclear or renewables, bypassing natural gas. Then we have XLEI energy. The pro is that it offers broad energy sector income and is very liquid. However, the con is that it's too broad and unfocused. It's dominated by oil and gas producers, not power generation, making it a poor fit for the AI power thesis. Right. So they might be able to get some of it, but if it's not a power generation, then they might get nothing out of it. Then you have HUTL, which is a global hybrid, small hybrid design, only 33% covered. This should keep most of the growth, which is a big plus. However, it's a Canadian listed, so it's going to be higher fees, I believe, for U.S. investors if you want to buy it. UTES is leverage. Pro leverage can amplify returns in a bull market, and then that leads to the cons, which is extremely high risk and also amplify your losses in a bear market, right? So it is a tactical product. It could be unstable, and long-term income investment might not hold. So that's the play there. All right, this is my AI income toolkit, pros and cons, right? So out of the three, like I kind of mentioned before, the utilities play, XLUI, pro, direct income on the utilities, getting the data center contracts. However, that's the pro. The cons is that it caps 100% of the upside, and you miss the big rallies, right? And then midstreams, of course, this is the pros that you get paid on the gas to power the power plants, a less crowded pick and shovel trade. However, the con is that it's indirect exposure, right? AI power shifts to nuclear or renewables, and this is pretty much no good. And then, of course, the global play, right? HUTL. The pros is that it's global diversification and a smart hybrid model, which is only 1/3 of its portfolio is covered. So you can actually have some NAV growth. However, cons, it is Canadian listed, so some brokerage might not even have it. All right, my verdict: if my thesis is valid, the AI boom is real, and this will create a volatile long-term trend, which is the perfect setup for cover call income strategy, because volatility is good for cover call ETFs. We love choppy markets. We love a short burst of bull and then comes back down and does it again, right? My verdict is that the top picks for U.S. investors is going to be XLUI, MLPD. These two, right? XLUI is going to be the most direct play on utilities power income, and MLPD is the smartest indirect picks and shovel play. I will be looking at these two. I don't know let me know if anybody else has looked into this. This will be fairly new on my radar also, so I've just kind of put together some cover call ETFs that would be able to at least get a little bit of the crumbs, right? Not of the AI boom. I want to get my portfolio at least 1 or 2, maybe 3%, maybe even 5% into the AI growth. So we can try to monetize it, and I'm trying to look for something under the radar. I don't want to get something that's already mainstream, because that may not also work out for the cover call ETFs that that are not really talked about, or the ones that may have the most potential. So let me know what you guys think. Subscribe, comment, like. I always appreciate it. Leaving comments of whether you disagree or not, you agree. I really appreciate all of the support and heartwarming comments. Thanks for the motivation to push me to really make these videos. All comments are appreciated, whether they're hate, love. All comments are appreciated. Thanks for watching, guys. Catch you guys on the next. Stay tuned.